Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, let's first talk about Friday. The stock market ended the week on a positive note as investors digested September's inflation figures and looked ahead to the expected rate cut on Wednesday after the Fed meeting. So the S&P 500, 6870, small gain. NASDAQ, 23,578. The Russell, the only loser on the day, the small caps, 2521. The VIX, back under 16. Looking more attractive, lost 2.34% on Friday. Crude oil back over 60. I've got 60.08, gain 0.69%. Gold 42.2770, lost $15.30 or 0.36%, but silver hung in there. 59.05, gained $1.56 or 2.72%. Bitcoin as of Friday, 89,707, lost just over 1%. XRP going nowhere, 203. Ethereum, 3,037, losing 2.41%. So for the S&P 500, record highs are once again in sight as investors watch and hope for the traditional Santa Claus rally to make its sometimes annual appearance. Well, yeah, guys, in this environment, I wouldn't be surprised if someone took a rocket launcher and blew Santa's ass right out of the sky. Too many geopolitical risks, too many systemic threats, too much upheaval, too many black swans out there for me to depend on any historical precedents. It's so bad out there, I'm just pretending I don't see it all at this point. Okay, the chances for a Santa rally, meaning late December, early January stock rise, are historically strong. Around 76 to 79% of the time since 1950 for the S&P 500, driven by optimism, lighter volume, and investor positioning, but it's not guaranteed, with recent market sentiment cautiously optimistic amidst potential risks like Fed policy and inflation, suggesting a potential dip buy opportunity if it stalls. Okay, for the week, all the indexes finished in the green. S&P 500 added 0.3%, NASDAQ 0.9%, the Russell 0.8%, and the VIX lost 5.8%. What sectors were hot last week? Tech and energy, both gaining 1.4%. Who lost the most? Utilities, 4.5% down. That's why I was nibbling at ULTY. Commodities and bonds, crude oil added 2.6% to finish at 60.08 a barrel. Gold lost 0.3% for the week, 42.43. 10-year Treasury lost 0.2 basis points to finish at 4.139. Crypto, Bitcoin lost 1.4% last week. Ethereum gained 1.6%, and XRP shed 7.1% for not one good reason I can think of. Okay, I have to say this. This is the weirdest market I've ever traded, and all I see is weird shit out here. First, let's hear from Young Hoon Kim. He posted, I renewed my Mensa membership, and as a Mensa member who holds the world's highest IQ, 276, that's a record, I am strongly convinced that Bitcoin will reach a new all-time high this month. Thank you, God. Amen. Then Tom Lee, another smart Asian guy. Tom Lee claims Ethereum will hit 62,000 in the next few months, ramps up Bitcoin call to 250,000. Okay, then perhaps the smartest Asian of all chimed in, my wife. She told me Friday night we all should have sold AMC when it ran over 70. Well, thanks, honey. That's useful information. I agree. Now wheel out that time machine of yours because I've got some other trades I need to make. Last week, we also learned Adam Aaron had a stroke, but refuses to leave this earth until he drains the last 1% of the equity out of AMC stock. Then, just to prove he was still in charge, from recovery, he blew out of all the company's Hycroft stake for what appears to be $24 million. A stake I thought was worth $500 million. All this guy had to do was invest our money in a bankrupt gold mine, which the company Hycroft used to pay off 5 short sellers of AMC, right? Then all he had to do was hold it, sell it, and I think he fucked that up too. I'm not even going to do the math. Donahue George is working on it. Whatever the results turn out to be, I already know the shareholders got fucked. I've just accepted it. So for next week, the Fed meeting begins on Tuesday. Then Wednesday, we'll first get CPI, then the rate decision in the afternoon. Then PPI and weekly jobless claims on Thursday. What does it all mean? No clue. I can't trust the data, the bad actors, the regulators. The foxes live inside the chicken coop at this point. Everything seems like we're working off a script. Guys, it would take me 6 hours to list all the risk factors I see right now, so I'll just point out some of the big ones. First is the Japanese carry trade. Weak Japanese yen is ticking time bomb. Investors are worrying about potential spillover from surging Japanese bond yields, why markets are freaking out over the yen carry trade. The carry trade is an investment strategy where investors borrow Japanese yen at a low interest rate and convert those funds into currencies with higher interest rates to invest in higher yielding assets like US stocks, bonds, or even crypto now. The profit comes from the difference in interest rates. That's the carry, and the stability of the exchange rate. The primary risk of the Japanese yen carry trade is a sudden appreciation of the yen, which can trigger a rapid, forced unwinding of positions, causing significant volatility and potentially widespread sell-offs in global markets across various asset classes. So that's what's lurking behind door number 1. Next up is the drama in Venezuela. Door number 2. The chances of a full-scale war there are considered low, but tensions are high due to recent U.S. military posturing and a deteriorating situation in Venezuela. The U.S. military has increased its presence in the region, but many experts believe this is a pressure tactic aimed at forcing regime change rather than preparing for an invasion. While direct conflict is unlikely due to the high cost and lack of necessary resources for a ground invasion, a military confrontation is not entirely out of the question. Guys, I'm not going to give you my analysis of this situation except to say this is a real risk, both to energy markets, which I already pointed out moved higher last week, and ultimately equities. I will only point out that China is the biggest investor in Venezuela and that Chinese and Russian interests are already on the ground. China's growing influence in Latin America. Could Russia end up fighting U.S. forces in Venezuela? And what U.S. forces face as Venezuela puts Russian armed military on wartime alert. You want to know how I played it? Oil climbs to 2-week high on Fed rate cut signals and supply concerns. Commodity wrap, rate cut hopes fuel gold, silver rally, oil prices climb on geopolitical risks. So we've got supply concerns, a rate cut on the table, and heightened geopolitical risk, right? Now, I could have played this with a common oil ETF like USO or XLE, but instead, I've been buying USOY. not investment advice or advisor. That's the Defiance Oil Enhanced Options Income ETF. And it pays weekly. I'm long at 690 and I've already received 2 dividend payments. The more uncertain Uncle Frank gets, the more he will raise cash. His trades become smaller, and I'll trade investment vehicles like this one. Here's the thing about oil. Someday, I can't say when, there will be a conflict. And you could see oil run from 60 to 80, 100, 120. You never know. Back in 2008, it ran between 147 to 148 per barrel. So in the meantime, I can get exposure to higher oil prices, which I did when it was still under 60, and earn weekly dividends for the rest of my life if I choose to. The strategy here, pay me until I'm right. From the Motley Fool, USOY is an income juggernaut. The Defiance Oil Enhanced Options Income ETF offers a monster yield. The fund distributes income to its investors each week. So that's how I played it. Now, if you guys are interested in researching these kind of investment vehicles, go to Stock Analysis, Weekly Dividend ETFs. There are now 131 of these kinds of products. Click Profile and then sort by asset class. Now, you could find the different kinds, commodities, currencies, equities, whatever you're looking to plug into your portfolio. Now, since I'm showing you all my dirty white boy banker tricks, can you hit that like button? Can you post this video on your social media accounts for me? Now, the risks behind door number 3, I call bubble land. We still have a potential AI bubble out there and maybe a quantum computing bubble to go with it. There's the $38 trillion US debt bubble, commercial real estate bubble, $2 trillion commercial real estate debt bubble, a residential real estate bubble possibly, $3 trillion private credit market bubble, $1.3 trillion credit card debt bubble, $1.81 trillion student loan debt bubble, $1.7 trillion auto loan debt bubble. The U.S. Fed Reserve officially ended its quantitative tightening program, or QT, on December 1st. The Fed is now expected to implement new reserve management purchases, or RMPs, which function similarly to quantitative easing, or QE, by injecting liquidity, potentially restarting broad QE if needed, as market participants watch for increased lending, lower long-term rates, and support for risk assets after years of QT drain money from the system. Now, the other thing I can't fit behind door number 3 is the hidden jobs crisis hiding in plain sight in this nation. Employers have cut 1.1 million jobs this year. Here's why. And see how the author from CBS is trying to blame Trump, Elon Musk, and Doge instead of big tech, automation, and AI. That's on purpose. You got to hand it to these people. They never quit with this shit. And thanks to their dishonesty, I learned something about Elon Musk I didn't know. He wears Brioni suits and overcoats like Uncle Frank did back in the day. AI's shadow over Silicon Valley, the 2025 tech layoff tsunami. U.S. layoffs fall in September, but year-to-date planned hiring at lowest in 16 years. AI layoffs are spiking. Could they be the housing market's next shockwave? At the time of this recording, I've got XRP at 203. It's Saturday afternoon, December 6th, about 12:43 p.m. To say I'm disappointed is a huge understatement. What I will say is that since that high in July, that's the red arrow at around 366, this token and the company that launched it have accomplished more in this short time window, about 140 days, than any other stock or crypto project I have ever seen in my lifetime. Billions have flowed into and through this project. Over a dozen ETFs have launched, and the only thing I can say for sure is a combination of forces. Call it what you want. Wall Street, bad actors, Ripple itself, whales, institutions sold even more than flowed in. It's that simple. So no, I haven't sold, and full disclosure, in my crypto portfolio going into 2026, there are only 4 names: XRP, XLM, Telcoin, TEL, and Hedera HBAR. My strategy now is to raise liquidity in my account. I will buy RLUSD, the Ripple stablecoin, and I will only add to my other crypto positions when there are significant dips or crashes. That's it. That's where I'm at on the matter. Now, there's XRP for the last month, down 8.87%. The XRP ledger has processed over $1 billion per day since early November. I say around 125 billion in total volume has passed through this thing, but sideways and down. How? How is that possible? 2 billion has passed through in the past 24 hours, and that's down 45%. So I don't know who's selling this much, but I find this level of control and containment astonishing. Okay, both from Saturday morning. XRP ETFs hit 1 billion milestone. What comes next? XRP ETFs have established a position among the fastest growing crypto asset vehicles, surpassing the 1 billion milestone in under a month. $2 XRP may soon become no more than a dream. Bollinger Band's warning. Guys, these articles are from the same publisher, You Today, same day. How am I supposed to reconcile this information? Is my next new catalyst to wait for BlackRock and Fidelity to launch XRP ETFs? So let me tell you something, guys. All I want to hear from Ripple right now is when they plan to launch their IPO and which banks and institutions are using XRP for its intended purpose. Cross-border payments and transfers. That's all I want to know about. So I'm going to review the entire portfolio, crypto and stocks going into rate cut week. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. This channel is for entertainment purposes only. But Uncle Frank is trading small and being defensive. Why? I don't like the look of the defense, and I hate trading when the S&P is at or near record highs. You can't get any traction on new buys, and you're instantly out of the money on dips on new positions. So here goes. In crypto, I already told you, when I have new dollars to invest, I'm buying the stable coin RLUSD, and I will only add to my crypto positions when there are steep drops, or better still, a crash. Not catastrophic, but a crash nonetheless. I'll just swap RLUSD for whichever coin I want to add to. This way, I don't have to worry about funding the account and getting blocked out like I did during the last crypto flash crash. On Telcoin, TEL, I'm looking for an entry point below 0.003488. Let's call it 0.0035. That's the red line. If it never happens, so be it. The next major catalyst for the Telcoin project are the full launch of the Telcoin digital asset bank operations and the rollout and adoption of its EUSD stablecoin in Q1 of 2026. These events are expected to bridge regulated finance, TradeFi, and decentralized finance, DeFi, positioning Telcoin for significant growth. There's the year-to-date on XLM. I actually like it down here, and that's why I opened a new position. I say anything under 22 cents is a bargain. I'm long here. There's the year-to-date on HBAR. I feel the same way here. I say anything under 13 is money. I'm long here as well. There's XRP for the past year. At 202, we're down over 14%. I still say, if any other fintech project got the headlines we did this year, it would have went parabolic. But that's the way it is for now. So no new money for XRP tokens. I've got a big bag. I'm still in the money. It's my largest position. But from now on, if I want to buy dips on XRP, you'll have to pay me while I wait. I'll buy Amplify's 3% monthly payer XRPM. That gives me exposure to the upside if it takes off and targets 36% for the year. Not investment advice or advisor. Look at the headlines, guys. XRP ETFs extend inflow streak to 13 days as institutions keep buying. And the price keeps going down. Well, that means someone is selling even more than that. And I don't care what the reason is anymore, including, oh, they want to knock it down so they can buy it, or they're trying to shake retail out. Go use that logic on someone who hasn't owned it for over 5 years. Haven't you guys figured out that Wall Street makes money no matter what direction the thing goes? They make money on flow, on volatility. I will look at adding to my XRPM position on dips, a sell-off or a crash under 2 on the spot price. Now let's do the stocks and ETFs. There's USOY, my weekly payer. I like having exposure to oil down here while the world is constantly at war and picking fights. I like being paid an outrageous dividend every week. See all those little D's along the bottom? They used to pay monthly, but now they pay weekly. Why do I own it and add on dips? Because I say someday someone like a Houthi rebel will attack an oil tanker. I say someday a war will break out in the Middle East. Yeah, I say eventually we will see higher oil prices, and I demand you pay me while I wait for it. I'm long at 690. I still adore Archer Aviation, ACHR. I say it's a buy under 8, and I shop for options when it dips under 750. Archer's next catalysts involve progressing towards FAA certification, solidifying major partnership deals like with United Airlines and defense entities, expanding its international presence in the UAE and Saudi Arabia, proving its Midnight aircraft in real-world testing, and successfully launching its first air taxi services in key markets like Miami and Abu Dhabi, with significant upside tied to defense contracts and Olympic showcases. There's YETH, the year-to-date chart. That's the Roundhill Ether Covered Call Strategy ETF. Tom Lee claims Ethereum will hit 62,000 in the next few months. Good, do it. I dare you, because I own YETH. It pays me a sick dividend every week, and if Ethereum moons, I'll participate in it. I'm long at 1680. Remember I told you utilities were the biggest loser last week, losing 4.5%? That's why I started nibbling for more on ULTY. That's the Yield Max Ultra Option Income Strategy ETF. They just did a 10-for-1 reverse, so I was watching for a bargain. I like this under 40. It pays a fat weekly dividend, and I don't think utilities are going away anytime soon. I'm long in the mid 39s. Now, this one is high risk. The Churchill Capital Corp X SPAC, symbol CCCX. I own this in the 14s. I like this in the 14s, but I should warn you, it could easily go lower on a pullback, just like any SPAC. Now, what I like about this one is it's about to become Inflection, a quantum computing company through a merger in early 2026 if everything gets approved. Now let me show you why I'm interested in taking the risk. Turns out Inflection ain't some punk-ass pre-revenue quantum company. Nobel Prize winning technology. Global installations in the US, UK, Japan, and Australia. 130 plus PhD physicists and engineers, 230 plus patents issued and pending, hundreds of quantum customers. And how about this recent release? Quantum Leap in AI and computing. Announced at NVIDIA GTC, Inflection and NVIDIA bring the NVQ Link quantum system to Illinois, strengthening U.S. leadership in quantum and AI supercomputing. When you look at Inflection's customers and collaborators, you can't help but be impressed. Not just NVIDIA, but the Army, Navy, NASA, Air Force, U.S. Department of Energy, L3 Harris, and ComEd. I'm starting to think this one could be the next D-Wave unless there's a quantum bubble. Inflection could go public in SPAC deal, valuing quantum computing firm at $1.8 billion. Inflection will go public through a merger with a blank check company led by veteran Wall Street dealmaker Michael Klein. The merger with special purpose acquisition company Churchill Capital Corp X is expected to provide Inflection with more than $540 million before costs. Inflection, which builds quantum computers and precision sensors, said proceeds would accelerate product development and expand applications in areas such as artificial intelligence, national security, and space. The combined company is expected to list under the ticker INFQ on a North American exchange. Inflection CEO Matthew Kinsella told Reuters he expects the deal to complete later this year or in early 2026. The company has roughly 185 employees. It has raised $283 million in funding so far since its inception in 2007. Quantum computing firms such as IonQ, Rigetti, and D-Wave Quantum have gone public through SPAC mergers in recent years. A SPAC is a shell firm that raises money through an IPO to merge with a private business and take it public, offering companies an alternative route to the market that bypasses the longer and costlier process of a traditional IPO. Inflection systems are used by chip designer NVIDIA, the U.S. Department of Defense, NASA, and the UK government. The company has about $29 million in trailing 12-month revenue as of June 30th, and it expects about $50 million in booked and awarded business by the end of 2025. There's the year-to-date on GSIT or GSI Technology, another one of my holdings. Their Gemini 1 and 2 Associative Processing Units, or APUs, are special because they use a compute-in-memory architecture. This increases energy efficiency and speed for AI and high-performance computing workloads. At Cornell University, a study showed that the Gemini 1 APU can achieve GPU-class throughput for some AI tasks while consuming over 98% less power than a comparable GPU like the NVIDIA A6000. They also get faster retrieval times. The APU performs retrieval and search tasks faster than conventional CPUs, reducing total processing time by up to 80%. Guys, I think there's a huge demand for this because let's face it, we simply don't have the power for all the data centers. So something that uses 98% less energy is going to attract some eyeballs. I'll add to my position if this dips under 6. So we'll see if the opportunity presents itself. I hate trading airlines, but I still like Surf Air Mobility, or SRFM. It's only a $140 million small cap, but the largest U.S. commuter airline by scheduled departures. Okay, so for a penny stock, that's saying something. Palantir owns 20% of SRFM, and I'll let barchart.com explain why I hold it. One penny stock Wall Street predicts will soar more than 450% in 2026. Penny stocks often fly under the radar due to their high volatility. Surf Air Mobility, which trades at roughly $2 a share, is a rapidly evolving regional air mobility company. After 7 consecutive quarters of meeting or exceeding guidance, and with an improved balance sheet and a high potential AI software platform nearing commercialization, Wall Street believes this penny stock will evolve more quickly than initially expected. I like this thing under 2.25, not investment advice or advisor. With Surf OS set to launch in 2026 and the company moving toward profitability, some Wall Street analysts predict this undervalued penny stock could skyrocket by as much as 458% next year. And obviously, this is what it's all about this week. Crucial Fed decision looms with stocks near records. Investors will be watching the Fed's comments and dot plot Bitcoin and any signs of a Santa rally. Guys, I've already said I don't like this kind of market. Extended, huge valuations, vulnerable. So I'm raising cash, watching for dips and crashes, and rotating into vehicles that pay me monthly or weekly. The earnings calendar is also active this week, headlined by Broadcom, AVGO, Costco, Adobe, and GameStop. Earlier in the video, I said 13 days, so here's an update. XRP price dropped 7.9%, but XRP ETFs record net inflows for 15 consecutive trading days. I'm not sure what I'm supposed to do with this information, guys. Hey, I want all of you to have a great Sunday and a profitable week this coming week. You know what I'll be doing Sunday, watching the Bears defeat the Packers at Lambeau Field, 3:25 p.m. Central. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.